Today I have unfortunately a lot of really bad news for you and especially for Bitcoin. Because Bitcoin is on the verge to potentially drop to $20,000 and the ignition moment for that could be happening today because of the Federal Reserve. And if you think that is an interesting topic and you want to know if we actually going to hit $20,000 or even lower for Bitcoin, then you should definitely stick around here. Make sure that you are subscribed to this channel, smash up the like button and also activate the bell so that you will never miss out on these really important updates. And now let's directly jump into it. So first of all, I want to start out with the CME Fed Watch tool. So we see here the next FOMC meeting will be in 20 days and 5 hours. So more or less 3 weeks from now, just before roughly Thanksgiving. And the expectation is still that we will not get a rate hike in November. So we see here a 91.4% chance that we are not getting a rate hike, so that we basically stay where we are, and an 8.6% chance that we actually get a rate hike. So, but today we will get the FOMC minutes in, what is it? I think in 6 hours from now. And that could dramatically change the outlook and the forecast for a potential rate hike, because the unemployment numbers and the what was it again? The farmers blah numbers. It slipped my mind what it was. They came out and they were in both directions worse than expected. So they were showing that the USA has a strong economy and that basically all the rate hikes have not really an effect on the American market. It was unemployment numbers. So yes, so they were expecting higher unemployment numbers, which would show that the economy is taking a hit because of the rate hikes and people would switching jobs and so on. So, but what actually was shown that the economy is growing and thriving while we have rate hikes, so that there's no effect visible on the rate hikes when it comes to the economy, and actually the economy gets stronger while there are occurring rate hikes. And it should be normally the other way around. The economy should start to suffer from rate hikes, and that is not the case. And that is not good overall, because that means that the available tools that the Fed has to fight inflation are not working. And there's only one tool left in the arsenal that they could use, and that would be printing money once again, which would of course be good for all markets because it will prop up every single market out there. But in the long run, it will be really bad for the economy and add more fuel to the fire when it comes to inflation. So here you can see, here is the summary about the Fed minutes, what people are expecting. So, and the takeaway from that, I will not read all of it, just giving you a takeaway of that, is that the Fed are still planning on to have a more restrictive grip on their decision when it comes to inflation, and to move inflation sustainably down towards the objective of 2%. So, and they are right now at 5 to 5.5%. So there is still a lot, there is still a long way to go to actually fight that. Something else I wanted to point out is also they just minutes away a week ago, the US avoided a shutdown because of their national debt that they have. And the shutdown would have caused that they are defaulting on the debt, and the USA would have then been bankrupt. And that would have been really bad. So, and that was just minutes away before that was happening, avoided. So, but there is only a funding package until the 17th of November. So basically another month. And if you would watch this debt clock here for 24 hours, so let's say you write down what the amount is now and come back in 24 hours, you're gonna be shocked, because it's multiple $billion that the US is ramping up every day in debt. So, and that is another reason why the Fed is kind of conflicted to print more money, because it will increase further the debt in the long run for the US economy. So, and that, of course, all these factors are playing into Bitcoin and into crypto market. And we have some indicators lining up that have never been giving a signal in Bitcoin's history for a potential downturn. And I'm going to show you that in a second. So let's start off here with the 4-hourly chart. I had told you guys yesterday that if we break here 27,170, that level, that this would be a good entry for a potential short. And learn and behold, we went here already to our first take profit point of $26,600. Remember, I told you there's a potential final take profit point at around $26,000 all the way down here. So I hope that you were able to take profit here on the first one, and then from there we got a small bounce. But there is potential more downwards pressure incoming, especially after the FOMC minutes that are going to be released later. So everybody is expecting a volatile day in the markets, and of course also in crypto after these minutes are released. It could technically still turn out to be a fake out, but for that Bitcoin has to come back up here to at least $27,400 approximately, and of course turn $27,170 back into support. But I'm not really seeing that right now happening, and that's why I'm prepared for more downwards price action. When we are looking here at the liquidation levels and our liquidity zones, so here you can see here once again, we have underlying high leveraged long positions. So these are way closer to grab down here than the liquidity that's up here. So it would still make sense that we move a little bit lower, like I said, in direction of $26,000 to grab all that liquidity from these liquidations, and then send Bitcoin back up to grab all the short liquidity that is sitting above us in direction of $28,000 and above that. The first indication that this is going to happen will be when we are breaking this downward sloping trend line here. The lower we go, of course, the lower also the breakup price. So for now, I would imagine that around 26,900, there could be the potential level that we need to break to move here back into higher levels. If we move here all the way down to $26,000, then it will be around $26,400, $26,500 in my opinion, because we have to extend this line. And when we have to extend this line here a little bit, let's say we have to extend it like this. So then most likely around here would be then the breakup point, in my opinion. So that is around $26,400. So, but this is something that we have to wait for to see how this is unfolding. That is just right now it's guessing. So if we would break up from here, then the breakup point would be around $27,000 if we would see a jump here to the upside. But of course, that's also a good next trading setup if you want to trade this. So just watch that trend line here on the 4-hourly chart. Once it's breaking to the upside, you can take a trade with a 1-hourly or 4-hourly candle close. And don't forget, guys, if you want to trade, do this here on BYBIT. There you still get $30,000 if you use my specific link and you support the channel with that. That would be really amazing. And also on BitGet, you still get a bonus if you use that specific link in the pinned comment below or in the description below. Now let's move on here to the weekly chart, and here comes the scary part, what I wanted to show you. So first of all, the price action gets really close to this supporting uptrend line that we are seeing here. And I told you that when I showed you this the first time, there is a potential that we come down to the bottom of it to test it, but then I would actually expect a bounce back to the upside. But here's something that yesterday I saw at Crypto Zombies channel, so I want to give him credit for that, because he's the only one that I saw talking about this. And that is here, the simple moving averages on the weekly chart. For the first time in Bitcoin history, they might create a death cross. It never happened before in Bitcoin's history that we got on the weekly chart a death cross, and that death cross, in alignment with everything what's happening economically, globally, and also in the US, could lead to that we could see a short-lived move all the way back down to $20,000 in that green support area here. And from there, going to see then a bounce back to the upside and continue the uptrend. So I want you guys to pay attention to that, because this is a really high probable scenario right now if we are not getting here a fake out on the weekly chart with these simple moving averages. So that is the 100 and the 200 simple moving average here on the weekly chart. So, and they will cross by the end of the month. If we are not seeing here something like this, what we have seen in the past, where they are just kissing each other, and then the 100 is bouncing off the 200, and we continue the uptrend. Also here on the daily chart, bearish price action can be observed right now. The price action is under the EMA ribbon. If we close this daily candle as it is, that would just solidify that we are most likely heading here also on the daily chart back into a downtrend. And then also the EMA ribbon will flip here again into a bearish territory, and we should be prepared for at least $26,000, $25,000 in my opinion. Guys, that's it already for today's episode. I hope you enjoyed it. Please make sure that you smash up the like button, hit the subscribe button, hit the notification bell, and I'm gonna see you then again tomorrow.